Hey everyone, welcome back to Alpha Insights. I'm Archer. Markets are open today and we've got a neat string of cannabis developments to unpack.
And I'm Allison. Super excited. And hey, if you have questions while you're listening, drop them at stockalpha.ai and we'll try to answer. Okay, let's dive.
Quick framing. Over the last day or so, we saw a couple of policy wins and some operational changes that could shift how investors think about the sector.
Right. Indiana did not pass a statewide ban on intoxicating hemp-derived products, which sounds small, but it actually removes a pretty immediate regulatory overhang for a lot of retailers and product makers.
Exactly. So the real question here is how much that lowers near-term risk. Practically, it means companies selling those hemp products avoid a sudden market shutdown this year. So revenue forecasts for exposed businesses don't have to bake in a worst-case ban. That doesn't mean the policy story is over. Similar bills could resurface. But for now, it's constructive.
And on the Midwest front, there's Nebraska, where medical marijuana advocates say they'll keep pushing after a notary was convicted tied to last year's campaign. Honestly, I was a bit surprised by this one, but the takeaway is the legalization movement stays alive there.
Right. So both items together reduce short-term regulatory volatility in parts of the country that matter for multi-state operators and regional retailers. Less volatility usually makes investors more willing to model growth rather than hair-trigger downside scenarios.
Which flows nicely into production. Growers are experimenting with something called a no-vegetative, or no-veg, method. Basically, they move plants straight into a 12 hours on, 12 hours off light cycle earlier than usual.
The trade-off is interesting. Individual plants are smaller, but you can run more cycles a year, and growers report a higher concentration of top-shelf buds. So annual output per square foot can go up.
Meaning, if producers scale this successfully, you could see more premium flower hitting the market more often. That could put downward pressure on mid-tier prices, while margins widen for operators who actually capture top-shelf premiums.
From an investor's perspective, this is a tech and ops story as much as a plant story. Faster cycles change unit economics, lower costs per gram over a year, even if per plant yield falls.
Exactly, and you should be listening for mentions of it in earnings calls. If management starts talking about cycle optimization or faster harvest cadence, that's a red flag. Or a green flag, depending on who can execute.
On the commercial side, there's also an industry event in Brooklyn in mid-March, the Cannabis Retail Association's annual gathering. That may sound like networking, but it's where retailers and brands show distribution plans and product rollouts.
Yeah, that's a good point. Retailers revealing new partnerships or SKU strategies there could be an early hint about demand trends heading into the spring and summer selling seasons. And culturally, cannabis keeps popping up in mainstream media, which helps destigmatize demand.
So what should investors actually watch this week and next? State policy calendars in the Midwest and other conservative states, retail signals from that mid-March Brooklyn event, grower reports, and any public company comments about no-veg or cycle changes. And of course, commentary from the big public names.
Speaking of names, keep an eye on the AdvisorShares Pure U.S. Cannabis ETF and companies like Trulieve, Green Thumb Industries, Curaleaf, and Tilray. Watch earnings and management commentary for mentions of state exposure, production method adoption, or margin impacts.
And remember, a positive policy headline is supportive, but execution and balance sheet strength decide winners. Policy opens doors, but distribution, brand strength, and cost efficiency determine who walks through them.
Short reactions. Interesting. Right.
To wrap up, quick summary together?
Policy moves in Indiana and sustained advocacy in Nebraska reduce near-term regulatory risk and keep the legalization pipeline open.
Operationally, the no-vegetative cultivation method could increase annualized output and shift unit economics, especially for premium flower.
And industry events and mainstream cultural normalization are quietly supporting long-term demand growth. Watch retail signals and public company commentary for concrete signs.
Got questions? We'd love to hear from you. Head over to stockalpha.ai, where you can ask us anything and we'll answer live. And while you're there, check out more market content and our Q&A feature.
Thanks for listening. Stay curious, and we'll see you on the next episode of Alpha Insights.